Ya tengo el link, ¿oíste?
Sí, dámelo si quieres. O envíalo tú mismo por allá, por Discord.
Hello. Hello, everyone. I'll be starting in about 2 minutes, so make sure to stay here. I'll be muting myself in a second. All right, everyone. Hello and welcome to Ninja Fantasy Trader. My name is Miguel Angel, and I'm here today as the educator for the Traderland Academy community. First of all, thank you everyone for being here. In this live section, I'll be talking about my trading setup for the stock market, especially what I use to trade on Tesla. The first thing we are going to use is the 5-minute chart. Let me show my screen here a second. All right, I think everyone can see my screen right now. Perfect. So one of the main apps I use to analyze the stock market is called Thinkorswim. So the reason why I like Thinkorswim a lot is because you can have different screens showing different stuff at the same time, but it is really organized. So that's why I like Thinkorswim a lot. So the first thing is that if you're a first user to this platform, once you are here in the app, you're gonna see this first screen here where you're gonna see the monitor area. This monitor area is basically where you're gonna be able to see your trades, your orders, and if they were filled or canceled, anything related to any open positions. Now, in this left side panel here, you will be able to create your own watch list with your top 10 actions that you like the most. And moving on, if we go to the trade area, this is the main area here. Let me close this here. This is the area where I analyze the contracts for the options. But here you can find the option chain where you see here. Additionally to the option chain, here you see the current price of the, sorry, not actually the current price, but here you can see the ask and the bid price if you want to buy, let's say, any options, action, sorry. So if I click here in the ask, you see here that I'll be buying one stock of Tesla at the current price. So here you see the ask. But let's say that I already have a few actions and I want to sell them. I can click here on the lead and click here on the bid. And let's say that I already have one action of Tesla. I can click here if I want to sell it. So this is like the easiest way to buy or sell actions. But for options, we'll be using the option chain. And something I like a lot about the option chain is this number here. This number here is really good because it is called the implied volatility. And what you see here in 49.967 is how much it is expected that price will be moving for this week, for this contract. So if we go to chart, and let me place this bigger here. So yesterday, Sunday, the price was at about 737.12. And when I was reading the implied volatility, it said that for this week, we were expecting a movement of $53.5. Obviously, it didn't say if it was to the upside or to the downside. But what we know is that if we use that value and sum it up to the current price, we saw that price could reach this point here, which is 794, or it could be moving to this area here, which is 679.61. So that is why we use the implied volatility, because it let us know how much price can move during that period of time. So in this case, let me go here. If we select this contract here, the July 8th, we will see that price can move about $80, which is almost, it's almost the double this amount. So if you want to trade, let's say do a day trading, you can obviously use the weekly, the first weekly contract that we have here, and use that implied volatility. And whenever I'm trying to analyze Tesla, the first thing I do is I can click here on Analyze. And here in the Analyze tab, give me 1 second. Okay. Let me turn on my camera for a second. Oh, my camera is not showing up. Let's see. Okay, everyone, give me 1 second. I'm trying to turn on my camera. Maybe it got deactivated because of the screen sharing. But here we go again. Perfect. Excellent. So every single time I'm analyzing Tesla, I click here on Analyze. And personally, what I have is the implied volatility, which is here, this vertical line. And in case you don't know what implied volatility is basically how much they're expecting. And when I say them, I refer to the institutions. It's basically how much likelihood you will have the price will be moving in that direction. Sometimes when we are having earnings, you will see an implied volatility of 100, almost 200. And basically, whenever you see such a high volatility, the contract price will increase. And whenever you pay for a contract that has 200% of implied volatility, you're paying for that movement. So whenever that movement happens, that implied volatility values goes down or decreases, and the first amount you paid basically will decrease. And sometimes that is called the implied volatility crutch. So moving on, we have the Vega, we have the Theta, the Gamma, the Delta. So the Delta we know is how much we will win for, how much we will earn for every single dollar the action increases in our favor. And the Gamma is how much that Delta would change for every single dollar increase. And then we have the Theta, which is how much we will lose in our contract value every time that 24 hours path. Then we have the Vega, which is how much our contract will decrease or increase whenever 1% of the implied volatility goes up or down. So those are my Greeks. And finally, I have the open interest. For me, this is very important because we see the contract volume here. But what if we want to know how many people left their contracts open? Well, the open interest is very useful. Here you cannot see the name, but give me 1 second. Let's see if I can. No, it's not allowing me. So basically, the open interest lets you know how many people sold or stayed with that same contract open. And sometimes it's very important because if you see that a lot of people are staying in that contract after a few days, it means that it is very, very likely that price might be moving to that area because they know an information that we don't. So that is why I use the open interest and the volume. And in case you have any questions on how to activate this, you can go to customize, and in customize, here you have the volume, open interest, delta, gamma, theta, vega, and implied volatility. Perfect. All right, moving on. So whenever I'm trading on Tesla, doing a quick scalp, let me show you my setup. Okay, perfect. So first of all, what I have here, let me close. I can close this. There's no problem. All right. So first thing first, this is the 5 minutes time frame, and this is Tesla in the morning. Why in the morning? Because here you see it was 9:30 when the market opens, and let's say that I want to know if Tesla was going to continue going up or down. Personally, this morning, I saw a lot of aggression to the downside, and basically that's what the price did and has been doing for a while. Like if we see the highest point was here, but even though it broke the 750 area, which is a really strong psychological point, we see we didn't have enough aggressiveness to the upside. Now, how do we actually know that? Because I'm actually telling you this, but I'm not showing you why. Well, the first thing is whenever I have the 5-minute time frame, I use the times and sells, which is this area here. And this is very useful because you can see how many people are selling in that same instant. So, for example, if I see that this whole times and sales is red, well, what that's basically telling me is that a lot of people are selling really aggressively. Now, let me here a second. If I have here the ask and the bid. All right. So if a lot of people are selling in the bid price, sorry, sorry. If a lot of people are selling in the ask price, then that can tell me. Okay, sorry, I'm saying that wrong. So basically, whenever we see a lot of green section like this, that means that a lot of people are buying aggressively, meaning that they're buying in the ask. But if I see a lot of things like this, basically what that's telling me is that a lot of people are selling in the bid, meaning that they're being really aggressive. Now, besides the times and sells, I like using, let me remove the bid and ask. Give me 1 second. So this looks a lot clearer. All right. So let's say that I want to know if price wants to go up or down. What I normally use is the contract. So let me go to analyze, and right now the price is at 731. Good. Let's see. All right. So I can use the 35 calls. Give me 1 second. Let me right click, copy the contract. Perfect. All right, there we go. So right now what you're seeing is the chart for the contract, but I'm not gonna use this. I'm gonna use the times and sales, which is this area here. All right, there we go. Perfect. This is the times and sales. And whenever using the times and sales, I always add the ask and also the bid and also the exchange. And there we go. So here we had got the ask, here we got the bid. And whenever we see a green order, that means that there was well, here basically is green, but sometimes this platform's not that accurate. But whenever we see green, what it's supposed to mean is that the person who like the two people who were involved in this contract, there was one person more aggressive than the other. We want to know if it was the seller or if it was the buyer. In this case, whenever we see green, it's letting us know that the buyer was more aggressive than the seller. But here in this contract, we see that the seller was more aggressive than the buyer. That's why we see red. Now, moving on, let's see, give me 1 second. All right, so I'm using here the call for the, let me select actually the 35. All right, so I'm using the call because I want to know if price wants to move to the 35 area. But I also want to know, give me 1 second so I can copy this contract. But also I want to know if some people are buying or selling the put options. So let me select here a second. Times on sales. Perfect. Let me add the ask and the bid and also the exchange. Perfect. Okay, there we go. So here I have the call. Here I got the puts. And if I see a lot of green here, what it's basically telling me is that people want, or when I say people, I mean institutions and market makers, they want this price to keep going down. Why? Because I'm using the puts. Basically, that puts means that if you see a lot of green, basically people are earning or are gonna earn a lot of money when price goes down. So that's why I got the 35 here. And if I see a lot of green, price, trust me, will be moving to the downside if this area is more aggressive than this area here. Now, on the other hand, if I see a lot of green in this area here and a lot of red here, basically what this is telling me is that price wants to keep moving up. So let me show you another thing I place here. Give me 1 second. All right, copy. And here, basically, if I see that the tendency is kind of like bearish or bullish, I'll be placing here another option contract based on the tendency. So right now I see a lot of bearish movement. So instead of having 735, I'll be showing here 730 just to see if the aggressiveness continues to that area. Okay. Let me add the bid and ask. Perfect. There we go. Now, finally, so here we see like this is not an accurate example, but right now we are seeing a lot of green, here, and it won't be strange if price will be going to the downside. Why? Because right now here at 30, I'm seeing a lot of aggressive buyers also here. But I want to see like more momentum. I want to see more orders coming through. And right now this tape is moving kind of slow. So, but let's say that you're using this same so let's say that you're using this same setup. So I'll be recommending to anyone that if you're using this setup, the best thing to do if you're trading Tesla, which is what this setup is like it is right now, I'll be trading maybe in the after 9:30, which is when the market opens. I'll be using this setup, seeing a lot of seeing where the orders are coming through and where the aggressiveness is going. So when this price was here at 756, I saw in the, let me place here in the puts, in the 740 puts, I saw a lot of aggression. And also in the, give me 1 second, here in the 50 puts, I was seeing a lot of aggression. And when I saw the 40 puts, I saw even more aggression. So I knew that this breakout was not going to continue up because I was seeing a lot of green orders here. And although I was seeing some green orders in the 750 calls, they were they were not that aggressive. They were not more aggressive than the puts and the basically than the 750 and the 740 puts. They were not more aggressive. And basically because of that, I saw that the biggest momentum was to the downside. And I didn't trade this because I was practicing. But if I would trade this, I would have gone from, maybe from this point here, or maybe lower, maybe from the 750 to the maybe 735, and that would have been a great trade, like for real, because we have more than $10 difference there. And when trading singles, those $10 difference, they add up a lot. So yeah, basically that's how you can use these contracts and the times on sale, so you can see how the momentum is behaving. And that's basically what I do to trade Tesla every morning at 9:30. And sometimes if I want to have more information, I have Active Trader Pro here, which is almost the same as Thinkorswim, but again, the setup, I don't like it that much, because in comparison to Thinkorswim, you see that this is a lot more organized, is a lot more visible. So I like it a lot more. But Active Trader Pro, is good. We got here the option chain. We see the volume, the open interest. Here we see the different contracts that are open. But basically, what I do like about Active Trader Pro is the way you can read the tape. Because, for example, here in the morning, let me go back. Let me go down. Sorry. Okay. Here in the morning, oh my God. Why? Give me one moment. All right. So this is today. These are all the contracts that were being closed and open. And whenever you see a wide transaction, what that means is that this transaction was made between the bid and the ask. Now, whenever you want price to move up or down, you need to see two things. The first thing is, if you're seeing a call option, you want to see the tape going green. You want the tape to look green. Why? Because that means that the buyer of that call option is being aggressive, meaning that they're willing to buy it at whatever price it is, because they know that price might be moving up. Now, whenever you see not 10, maybe 30 contracts, and they look green, and you see that on the tape, on the here, and you seen that here, that information is valuable, because it might be telling you where the market might be moving next. But here, whenever you see a red transaction, that means that the transaction was made in the bid. So again, here you see 25. It means that the transaction was made on the bid. And probably in this area here, what that means is that the seller was more aggressive than the buyer. So if the seller is being more aggressive than the buyer, probably is because they're selling premium that area. And again, if you see a whole red contract, probably is because they're selling premium. So here, the green contract, what they mean is that this transaction was made in the ask, meaning that the buyer was really aggressive. So whenever I'm using Thinkorswim or Active Trader Pro, I like to read both, because they give different information that if you interpret both, you might have better results. But yeah, basically, if you don't have Active Trader Pro, don't worry, you can use Thinkorswim. It will work really good. And making a recap, remember that if you're gonna trade Tesla, and right now Tesla was at, let's say, 755. Sorry. So let's say you were trading Tesla at this point here at 9:30. and you saw that Tesla was at 756. So the contracts that you can use to see the momentum could be 50 calls, whatever, whichever, doesn't matter. And here I got the puts. Let me here set up. So yeah, you can have the 55 puts and the 55 calls, and based on the transactions and what you're seeing, you can determine if price is going up and down. And if you see that the biggest tendency is to the upside, then you can have here another call. But since I was seeing a lot of aggressive in the puts, I decided to have 2 contracts being put instead of 2 being calls. And yeah, basically, let's say that you saw that the biggest movement here was to the upside. You can have here maybe, let me see, give me 1 second. All right, so you can have the calls at 50 and the calls at 55. And let's say that you were seeing that price was at 756, but the contracts here were really, all right, give me 1 second. This is supposed to be call. All right, and this is supposed to be put. All right, there we go. So let's say you were at this point and you saw that a lot of contracts were red and this area was red, but when you were seeing the 55 puts, they were green. Probably what that was telling you is that price was not going to continue its momentum to the upside, meaning that price might have, a retracement. And what happened here, again, I was literally seeing something like this, like the calls were red, but the puts were really green. So what that was telling me is that the aggressiveness for today was to the downside. And what happened after I was in this point here, I saw that near contracts to this price, again, this point here was 35. So at that point I was seeing, give me 1 second, I was seeing 30. I was seeing 35. And here I had, so at that point there, I saw that the tape for the calls at 30 and 35 were looking green, and there were a lot of orders with really big sizes. So then I knew that price at that point was not going to continue going down. And what I did in my practice scenario was that I closed my operation at that point because I saw there was going to be a reversal. I saw a lot of people here buying. It was really green. Here it was green. It was green, and the put options, they were a little bit green, but they were not more aggressive than the calls. And what happened later? We see that price went up. Obviously, it was not enough momentum to break the highest point for the day. But again, this is a setup for doing a scalp instead of, this setup is not mainly for day trading. It's more for doing quick scalpings. So this is actually all for today. I'm gonna be open for any questions now. All right, I see Victor Hennessy's. Does anyone have a question with what I mentioned today? All right, don't worry. Let's see. All right, if there is no question, I hope that the explanation was cleared. If not, just let me know and I'll explain it again. But doing a final recap, you can use the times and sells for the action, and you can use the times and sells for the options. So there are two different times. There are two different times and sells. The one for the action, meaning how many actions are being bought or sold. And you can see here how many contracts are being sold, or not actually sold, but who was more aggressive, if the buyer or the seller. So that's why we use the times and sales. So if there's no further questions, I'll be ending today's section. And thank you everyone for being here. It was a pleasure. Also taking into consideration that me and Diego, that we are the educator for Ninja Fantasy Trader, we will be making these transmissions more current, explaining, stock market, explaining the forex market, explaining the crypto market, and hopefully you can make any questions. You can make, you can clear any doubt that you might have. But with that being said, again, thank you for being here, everyone, and have a nice day and take care. Bye-bye.